All right, hey, good afternoon, everyone. It's 1:30. Let's take a look at corn. If you were watching the markets at all, you noticed that there was quite a bit of there was some buying in there today. The market got a little surprised at 7:30 at the export sales, which were stronger than normal. Not enough to really change the balance sheet, but you know how markets are when traders get nervous. That's what they tend to react to things. So it's also the end of the month. And on month end, a lot of times we have squaring up. Funds have been short corn for a long time, um, and so who knows just how they wanted to go home balanced. The next 3 days are really important. Friday, Monday, Tuesday are the first 3 days of a new trading month, and so I think that action needs to be really closely monitored and paid attention to. But what I want to talk to you guys about is corn and exactly how it sets both in old crop and new crop. So this is new crop, DS24 corn. We have been recommending being hedged here because of a lot of factors. Most importantly, we don't like this big wedge when we really don't like being on the bottom side of it. So Monday, we have the big down day, right? And this down day formed three black crows, which is a candlestick formation where the full body of the candlestick each day gets progressively larger as the market falls. Okay, so three black crows. It's a sell signal, and it typically results in a 3 to 5 more days of selling. Now, where this found support is right here at $5, which is good psychological support, but technically it doesn't really mean anything. But what does matter is that it found support here at what we call the magnet. What is the magnet? Well, magnet is the origin of the move that ended here. So it would be the origin from here up to this point here. So then you have your Fibonacci retracements, and what we would call the magnet is the origin point. A break below the magnet accelerates the move down to lower targets down here between 480 and 490, okay? So what we have is this hasn't materialized yet. We really thought it would on Monday as we broke out of this wedge, but now we've reversed and we're testing the bottom side of this triangle. It's perfectly normal for markets to break out of a wedge or break a trend line and then come back and try to test the back side of it, right? Come back, kiss it, and then roll back over. What's got us a little bit on pause here on corn is the fact that this is now three white soldiers, which is the inverse of this signal. So here we've got 3 days down, 3 days up, three full bodies of increasing size here, which is a buy signal, which would typically result in 3 to 5 more days of buying. So it's a really tough position for corn to be in here. And our algorithm is perfectly neutral right here. We closed right on our hedge line, but we're below all of this stuff. So it hasn't flipped long yet, but it's super, super close. So any strength up tomorrow up above this trend line, we're going to move to long calls, short futures on December 24 corn, and we're going to hold that. And then what happens if we break down below the magnet? What we'll do is exit the long calls, and we'll risk that premium on a whipsaw. So the 5-10 calls we're trading for about 41 cents today. And so here's the plan. If we get some strength up out of here tomorrow and we put pressure on and we get through this downtrend line and put pressure here on this downtrend line, uptrend, downtrend. Sorry, I'm talking too fast. If we get up and through here, we're going to buy 5-10 calls. It's going to cost 42, 43 cents, something like that. Then if we get up above this, we're going to sell a $5 put. And we're going to neutralize those short futures and keep that upside open. But we're not going to sell the put. This is important. We're not selling the put until we get more strength up in here, because what's a very realistic possibility is we had a false breakout to the downside and we turn around and come back up out the top and have another false breakout. That's the way these markets have been trading. It's unusual for it to do that, but it is what it is, and so we just have to do the best that we can with it. So what we want to do is buy a call on strength tomorrow. I want to buy 510. If you're not comfortable with that, I'd buy 520, but I'd buy 510. And then as we get higher and break this resistance, I want to sell a put against it. in order to pay for that premium and get that delta out of there, so we can be net long our cash corn here. Short futures, long call equals net long cash. Okay, short futures neutralize long cash. You own the call, it opens the cash back up. You sell the put, it increases the efficiency of that trade. And then if it does reverse back down, we'll exit the options towards the bottom here and maintain our hedges. But if beans get going and wheat get going, I will jump over here in wheat. One of the things that's making us think this way is, sorry, that is not wheat. That is December corn. Here's wheat. One of the things that's making us think in this fashion is the 60-minute chart of wheat, which is, let me get to March, KWH24. Here's your March wheat. You've got a quick 1 up, 2 down. You have a perfect buy signal right here. You're up 3, 4. This is up in 5 waves on the hour chart. So on the daily chart, it looks a little different. Here's your daily chart. It just looks like it's straight up. But if I come back down to our shorter term time frame, we have a nice double bottom, 1, 2, 3, 4, 5, and 5 probably isn't done yet. But what we want to see here is 5 up, 3 down. And if I go to the 240-minute chart, it's even clearer. Here's 1, 2, 3, 4, 5 into A and 1. I want to see 3 down, A, B, C, right down into this, probably this 620 mark, and that's going to be a B and a 2, and that's a go signal. That's where you want to get long wheat. So our system is long new crop wheat. We're long with call ownership. We had those signals materialize a few days ago, but we want to be open to the upside here on wheat. I want to be open to the upside on beans, and as far as corn goes, I just went through that. So if they all 3 start moving higher, we got to get long corn here too. So buy a call, we'll wait, we'll sell a put if it earns the right for us to sell a put, and if it doesn't, no harm, no foul. We'll exit that long call on a move back down here below our magnet. That's how our system works. We're in this big consolidation area. We know we're going to go up. We know we're going to go down. We just want to capture as much of each move as we possibly can without opening ourselves up to too many whipsaws in the process. So that's the plan. That's how we're going to approach it. And I know that everybody is scared to be hedged this early, but it's okay. There's no reason that corn can't pop down into these areas. There's nothing preventing it from doing that. It's not a law or anything that you have to rally in December. But if it does, we'll be ready for it because we have a plan, and then we'll adjust accordingly on the next signal. Hope you guys have a great night. Remember, there's always risk trading futures and options, and you should only do so in light of your own financial condition. If you have questions, call us, please. We're happy to talk to you about it. No signal yet, but stand guard because the signal's probably coming. My expectation is tomorrow we're going to get more buying, and we're going to come put some pressure on people on the backside. If we don't, okay, no harm, no foul. We'll deal with that as it plays out too. Have a great day. We'll talk to you later. Bye.